When is the best time to buy physical gold? Should you buy when the price is going up and hitting all-time highs, or should you buy when the price is relatively low? We're going to look at buying gold in general, as well as investing in gold right now. So let's do it. Thank you so much for watching my video. If you would like to learn more about investing in precious metals, or if you just want to watch awesome videos about gold and silver, make sure to subscribe to my YouTube channel. Okay, so when is a good time to be investing in gold? When has gold historically done the best? And is right now a good time to be purchasing gold? Those are the things we're going to cover in this video. Also, I'm super excited because I have partnered with Gold Royalty. We will talk about them later in the video and the awesome opportunity that they have. This is my most recent gold purchase. It is 1/4 ounce of 22 karat gold, and it's a Gold Eagle. These are one of my favorite types of gold coins to be buying because I live in America, but also they're one of the most popular types worldwide. So did I pick that gold coin up at the right time? Is now a good time to be buying gold? Well, let's talk about when gold does really well historically. Here is a chart showing the gold price over the last 50 years. And as you can see, gold bull runs coincide with negative real interest rates. So when gold is flourishing, real interest rates are negative or going down. But what is happening with interest rates right now? They're actually going up. We are going to see another rate hike in July, but after that, the Fed is going to have to start slowing down, and eventually they're going to have to reverse course.
You shall not pass!
So as an investor, you need to be 1 or 2 steps ahead of everyone else and get in before they do.
Because after tightening comes what? Easing. And so the best stress test for gold is happening right now. In 1 year from now, this price is going to look silly because they're going to start easing. So I need to buy in advance before the other guys buy, right? That's how you make money. You buy early. So I think people they make a 1, 2, 3 type script in their minds. They're like, okay, raising rates raises interest rates, so raising interest rates makes inflation less, and they make this train of thought that's very simplified, but the markets don't work that way. The markets have made that train of thought a year ago. So the art of this is to know where is the market compared to the consensus. And the market is way ahead of the Fed, and that's why gold here is a steal deal.
For me personally, the question is not if gold will rally again in the near future, but how high will it rally when it does? I mean, we're likely already in a recession. Look at the Great Recession and how much gold rallied at that point in time. Now, Peter Schiff thinks the recession we're already in is going to be much worse than that one. So how much higher could gold go? I mean, this could be absolutely explosive. When it comes to investing in gold, or really anything, you want to buy low and sell high. You don't want to buy at the peak. And right now, the price of gold has come down quite a bit from its peak. So is now a good time to be investing? I think absolutely yes. I am really happy with my recent purchase, and I definitely plan on picking up more gold, especially at these prices. Now, buying physical gold is the safest way to invest, but if you want leverage over the spot price of gold, you need to look at other investments like mining stocks or a gold royalty company. Investing in gold miners can give you incredible leverage over the spot price of gold, but the one downside is that miners are affected by inflation. As the cost of everything goes up, it costs more to run a mine. On the flip flip side, gold royalty companies, they don't have any production costs. Look at how well they've done compared to gold over the last decade. Now, you don't have to just take my word for it. Here is the CEO of Gold Royalty, David Garofalo. Listen to what he says at the end of this powerful clip.
What you're seeing effectively over the next 5 years is at least a five-fold increase in our revenue profile. And that's the most pronounced in the sub $1 billion royalty sector. So lots of significant growth. And we do this with a very, very small team, about a half a dozen employees. And I'm confident to say that we could run a business 10 times the size with the same human footprint. And that's the beauty of the royalty business. It gives you that top line exposure, leverage the gold price, leverage the exploration upside with the scalability with a very low G&A footprint, without the exposure to the underlying risk of operating capital cost inflation, which is a very real risk at this point in the cycle, in my view.
So if you want that leverage over the spot price of gold without the risk of inflation eating away at profits, then maybe a gold royalty company is right for you. Amir Adnani is the founder of both Gold Royalty and Uranium Royalty. Now, when the price of uranium took off, we saw Uranium Royalty do extremely well. So if gold takes off in the near future, something similar could happen to Gold Royalty. Now, their CEO, David Garofalo, who we just heard from, is no stranger to success. He was the mastermind behind the Newmont and Goldcorp merger, which was the biggest merger in gold industry history, a $32 billion deal. And now he runs Gold Royalty. This is a company which has no debt and even pays a dividend to their shareholders. Speaking of shareholders, billionaire and legendary mining investor Eric Sprott is a big shareholder of Gold Royalty, and he has an impeccable track record at finding triple-digit winners. Now, Gold Royalty's IPO round raised funds at $5 a share. That's when Eric Sprott, as well as self-made billionaire Rob McEwen, one of the best gold entrepreneurs ever, and other big institutions participated and put millions of their own money at risk. Some of them even have 3-year lockups. Currently, their shares are trading for under $2.50, which means they would have to double just to go back to par. On top of that, HC just issued a price target of $8.50, implying a 240% upside from here in the next 12 months. Lastly, I want to bring up Gold Royalty's ever-growing portfolio. They have royalties on North America's 3 largest gold mines. They have 198 royalties in total, 8 of which are already in production. If you want to do your own due diligence on Gold Royalty and see if they're right for you and your portfolio, I will put a link down below in the description. When it comes to investing in gold, the absolute safest way to invest is to buy physical gold. This should be a part of everyone's portfolio. This is real money. It's real wealth that you can hold in your hands. It will go up and down with the spot price of gold. If you want to invest in gold mining companies or gold royalty companies, this is more risky, but you will get leverage over the price of gold. So always remember to do your own due diligence. I want to say a massive thank you again to Gold Royalty Corp for partnering with me to help make this video possible. And I do want to say a massive thank you so much to all of you for watching, and I will see you in my next one. Silver Dragons out.